Benchmark indices have corrected after 2 days of straight line gains. Banking stocks corrected, and they corrected with some force after Reserve Bank of India governor clearly indicated that in the near term it will be difficult for Reserve Bank of India to adopt a very strong stand on rate cut because inflation is still above the comfort level. In terms of absolute gainers and losers, Reliance was the top traded counter on Reliance was the biggest gainer on the Nifty today, and Unitech once again was the top traded counter on both the exchanges. Metal stocks were under pressure, and selectively today momentum stocks have cracked, which means the market breadth was not all that strong. Arcom, Unitech and JP Associates, these three stocks this year, they really have been the harbinger of market mood and market action, and one is now getting a sense that momentum stocks are really taking a back seat. In terms of gainers, HCL Technologies along with Dr. Reddy and Reliance, these were three large cap stocks which managed to outperform. In terms of absolute losers, just about everything from the metal space, Tata Motors, JLR dispatch numbers were not all that impressive, and money clearly moved out of State Bank of India along with other PSU banks. Mid-cap losers, well, plenty of mid-cap losers. First, let's take a look at gainers, and then we'll talk about mid-cap losers. Strides, Polaris, and then Phoenix Mills. In terms of losers, Pantaloon Retail, Indiabull Finance, and Exite. Now, Pantaloon and Indiabulls Finance, I would imagine that they are simply consolidating because the run-up in Pantaloon and Indiabull Finance of late has been quite extraordinary. So net-net, benchmark indices are looking slightly rusty. Momentum is looking slightly tepid. Indian markets, which so far have capitalized on good news, today they decided to react to the negative cue which came late last evening from Reserve Bank of India governor. So how should one read into today's market action? Is today's market action just a blip in overall rally, or we could be staring at some trend reversal in coming days? Let's discuss that with Naren, Gul and Sandeep Wagle. Sandeep, let me kickstart today's panel discussion with you. How would you characterize market action for the day gone by? Would you say that today's decline is more like a buying opportunity?
Nikunj, it depends on what time frame, time horizon one is looking at. If you are a trader, then no, there could be some more downside to the tune of 40-50 points on the Nifty. The trend in the Nifty will change if 5940, 5930 is taken out on the downside, and then I would talk of a possibly 5800, 5850. I would talk of a halt in the momentum. Well, today's correction, you can say, or a sell-off, last late minute sell-off has definitely put a spoke in the wheel, but I still feel the trend is intact. Though we have lost the momentum in the short term, which is a few days or so, I still feel this is a buying opportunity if you are talking of a few weeks to a few months. But if you're talking of today, tomorrow, day after, then possibly you can have some more downside to the tune of 40-50 points on the Nifty.
Gul, what is your understanding? Do you think in the near term markets have hit some kind of a stumbling block?
Not really. The liquidity continues to be strong. The numbers which are coming out from companies have been all right. Going forward, the economy looks like as if it's on an improving track. Yes, the markets have run up. So you will see these whipsawings around the place. Traders obviously are not going to make money in these situations. It's a market for investors all throughout. If you see from 4700 or thereabouts when the market started moving up, it has not necessarily given great opportunities except for a few in between. And obviously nobody gets a clear-cut picture as to what's happening. But if I'm an investor, I do know that the economics environment is changing for the better. And if the government continues with this and does not do any negative taxation standpoint in the budget, wherein they bring in this inheritance tax or increased tax on individuals or for the corporates, I think we are still on terra firma. And apart from these corrections which will come in between as we go along the way, I am not so much concerned.
Naren, let me also encourage you to join in the discussion. What is your understanding, Naren? And after the recent run-up, how exactly you would like to map the risk-reward ratio?
See, actually, the market still is that you have a set of about 15 stocks which are pretty expensive, and the rest of the market is reasonably valued. We are awaiting an improvement in how fiscal deficit and current account deficit can be controlled. And like what was discussed a week earlier, if you are able to implement an increase in diesel price and kerosene price, that would be a pretty big positive for the markets. I think this year is a year where the government has to try to bring down both fiscal deficit and current account deficit. And if they are able to do that in a smooth way, I think the markets are likely to see a positive view after the deficits come down. I think inflation is a byproduct at this point of time of both very high fiscal deficits and current account deficits. So I think this year is going to be a year where economy and politics are going to dominate the things, and we are in a situation where the markets are fairly valued, with some stocks being overvalued, and therefore the markets are not giving you an idea either way. But I think what the economic and political action will be this year will be very important.
Gul, Reserve Bank of India Governor clearly has indicated that given the kind of macro environment we are in, it will be very difficult for RBI to justify a strong rate cut. Do you think that comment really spooked the markets today?
I think the bond market got spooked very quickly. I think probably the equity market followed thereafter. But I won't read too much into it. I mean, he was giving a lecture in Lucknow. He won't say a strong rate cut. We don't know the context in which he was answering. Let's wait for 29th and see what happens. Pretty much, as we both know, the inflation could still be a tad lower before you can see aggressive rate cuts. But I think the whole clamor has been that, the rate cuts have to come in, at least some, I would say, signaling of rate cuts. And that, I think, he has himself laid out the plan and saying that I will do it in January. Now, it could be tokenism in that, or it could be aggressive. That, I think, is the buck is with him. It will stop with him. He has to decide. But, there's no gainsaying that we could do a little bit less inflation. And as Naren said, that obviously fiscal deficit and current account deficit are both playing havoc. And as you know, unless you correct fiscal account deficit, you won't be able to correct your CAD as well. So it goes hand in hand. And obviously that leaves very little legroom for the governor. So he's pretty much stating the obvious. And obviously, he has also promised that he will do something. So that something what people are expecting could be 50 basis points, but you might land up with 25. But at least it's a start somewhere. At least it will add to the sentiment, I would say.
Gul, would you agree with my assessment that 2013 could be a year for Reliance Industries?
Both 13 and 14, because more than the GRMs, I think if the gas prices are increased by the government of India, as has been the talk, I think that stands to gain. Obviously, his retail business, somewhere or the other, he will find somebody to partner him. And effectively the stock hasn't performed also for the last 4 or 5 years. So that itself is a good enough reason. Most people would be trying.
Okay. Lost him there, never mind. Sandeep Wagde, Reliance Industries. The stock today appreciated by about 14 rupees plus. Market conditions were very ordinary. Nifty cracked and closed almost at the lowest point of the day. But Reliance Industries went pretty much the other way around.
Nikunj, absolutely. And in this kind of a market situation, the way it has, I think it was a saving grace for the market. And I have a view of 920, 930. A little bit stabilization of the Nifty, and we will see the Reliance at 920, 930, and possibly if it can hold, the weekly pattern can turn very, very positive. It will clear a lot of resistances on the way. So we will be in for a surprise. It can even go to 950, 960, and this is a view that I am talking of for the next few weeks or possibly a month or two.
So will 920 come first, or will 850 come first?
Nikunj, is this for me?
That's right.
Well, 850 can come in. 850 is just 10 rupees away. I mean, I would put a stop loss of around 835. That would be a swing low. That would be a safer stop loss. 850, if it comes, I would buy in. And once above 875, I would add on more. That would be a right prudent strategy. And I would talk of a 915, 920 over the next few weeks.
So, Sandeep Wagde, you are reasonably confident that Reliance has bottomed out. Just a yes or no answer.
Yes.
Okay. Reliance numbers are out on 18th. Naren, I know there is a compliance issue. You cannot talk stocks. But in general, what are your expectations from Q3 earnings? Do you expect more downgrades or more upgrades?
I think clearly at least the few results which have come ahead of our expectations. Some very much ahead of our expectations. My own view has been that it's not easy to have earnings growth in the environment that we are seeing at this point of time. But the initial numbers don't reflect my view. They reflect a much better situation. But I still believe that it's much better to have a lower current account and fiscal deficit and poorer earnings. And because I think once the fiscal deficit and current account deficit comes down, I think interest rates will come down and finally take up earnings. So I'm less worried about earnings for this season, although I must say that the first few results are much beyond my expectations.
Naren, if I look at your current declared portfolio, as a house you have a very large exposure to Bharti. Any reason why you are still bullish on Bharti?
Actually, we don't talk on individual stocks, but we have cut back our holdings in Telecom, not because we don't like the long-term story, but because we have got our returns very fast. I don't think in August, September, when we built our big Telecom holding, we expected to see this kind of return in 4-5 months. And if people had believed that you will get returns in 4-5 months, we wouldn't have been the only outlier on the street. But what has happened is we have seen some huge inflows, a huge rally in Telecom stocks. Beyond our expectations for the short term. I think on the long term, these stocks are still very attractively valued, but the short term is looking pricey because of the big move which we have seen in the recent past. I think Telecom still represents the only consumption cyclical which is trading cheap relative to its history and to the likely improvement possible. Whereas if you see most of the other consumption cyclicals, we are in a situation where the stocks are trading at all-time highs, and in valuations also they are trading at all-time.